You know exactly what I'm talking about. You're scrolling online and bam, flashy screenshots of huge profits, rented Lamborghinis, wild stories of some guy getting incredibly rich overnight on a meme coin with a dog on it. It looks absolutely incredible, right? It's so easy to see the appeal. But listen, we need to cut through that hype right now and hit you with the cold, hard truth. Real trading, it's not about luck. It's built on intense discipline, strict risk management, and slow, long-term growth. The people actually making money out there aren't just getting lucky. They're succeeding because they understand some brutal truths that beginners just completely ignore. So let's just dive right into it. Welcome to today's explainer. I am so pumped to be your guide as we break down what actually makes money in the financial markets. We're going to look closely at the trader's evolution, exploring 10 fundamental market truths inspired by insights from the disciplined trader. These are the real, sometimes harsh, but absolutely crucial lessons every single person needs to know before they risk a single dollar out there. Here's our roadmap. We're going to start by shattering expectations. Then we'll look at the reality of risk, navigate the psychological battlefield, and finally outline the path to consistency. All right, part one, shattering expectations. Let's just tackle the elephant in the room right away, that burning desire to just make fast money every single day. Look, fast money and overtrading lead to ruin, period. True professionals simply do not operate like that. If you're going into this hoping to double your money in a week, the market is going to teach you a really painful, very expensive lesson. Pros focus on consistent growth over overnight gains. They know building actual wealth takes months, even years of practice. Their absolute number one priority, protecting their capital first. And that long-term mindset leads to a truth that honestly frustrates a lot of beginners. Not trading is sometimes the smartest decision. People think you've got to be in the market, pushing buttons, making moves every single day to make money. But over-trading, it just leads to unnecessary losses, extreme stress, and frankly, terrible decision-making. Patience is your superpower here. Waiting for those high-quality opportunities is always going to beat the stress of forced daily trading. Sometimes, literally just sitting on your hands and doing absolutely nothing is the ultimate pro move. Moving on to part two, the reality of risk. 2%. Just 2%. It's a shockingly small number, isn't it? See, while beginners are entirely focused on how much money they can make, experienced traders are hyper-focused on what they could lose. A trader who makes great profits but completely ignores risk management is just going to give it all back to the market eventually. Professionals typically only risk 1 or 2% of their total capital on any single trade. Think about that ratio for a second. You're protecting 98% of your capital and risking just a tiny little sliver. So if you have $10,000, risking 1 or 2% means you're putting maybe $100 or $200 on the line for a setup. This rule is entirely about survival. It's a mathematical shield. It ensures that when you inevitably hit a losing streak, and believe me, you absolutely will, you can survive it and stay in the game for the long haul. Protecting what you have is rule number one. You have to realize that losses are just a part of the business. Think of it like a casino. They don't win every single hand of blackjack, do they? But they have a mathematical edge that guarantees profit over thousands of hands. Traders have to think exactly the same way. There's this massive misconception that successful traders win every single time. Totally untrue. Even the absolute best traders in the world take losses regularly. The secret sauce is that they keep those losses incredibly small, like that 2% we just talked about, and they let their winning trades run. You can't beat yourself up over one single trade. You just have to accept small losses as a standard business expense. Which brings us to part three, the psychological battlefield. Because as it turns out, the real war isn't happening on the charts at all. It's happening right in your own head. Fear and greed are literally the two biggest enemies you're ever going to face. Fear is that voice making you panic and close a winning trade way too early before it even hits its target. And greed? Greed is what makes you stubbornly hold on to a losing trade way too long, just hoping and praying it turns around. These two emotions absolutely destroy accounts. So many people know exactly what their trading plan says, but their emotions take over in the abandoned ship. Honestly, discipline usually trumps technical knowledge every day of the week. And here is a pretty stark, pretty harsh truth that we all have to swallow. The market does not care about your opinion. It doesn't care what you think should happen. People get so emotionally attached to their predictions, When the market moves against them, they just refuse to accept they're wrong. They hold on and they just lose more and more money. Trying to fight the market because of your ego will literally just drain your wallet. The pros adapt to what's actually happening in front of them. They don't fight it. Being flexible is a massive secret to surviving. People will spend months memorizing indicators and chart patterns, but almost zero time working on their own psychology. So let me challenge you directly right now. Can you stay calm during a losing streak? If you take 3 losses in a row, do you actually have the discipline to wake up the next day and execute your plan perfectly without flinching? And perhaps, even more importantly, can you avoid revenge trading after a really bad day? Take a second and actually think about that, because your genuine, honest answer to that question determines your long-term success far more than any technical setup ever will. All right, our final section, part 4, the path to consistency. We've shattered the illusions, we understand the math of risk, and we've faced down our own psychology. So now, let's talk strategy. You can find thousands of strategies online, but think about what a strategy actually is. It's just an approach, and it is completely useless without discipline, risk management, emotional control, and consistency. You could give the exact same strategy to 2 different people. One becomes a millionaire, the other goes completely bankrupt. Why? Execution. A super simple strategy executed perfectly is infinitely better than some highly complex master plan that you can't actually stick to. So how do the pros actually execute perfectly? Well, they use a tool that almost all amateurs completely ignore: the trading journal. Seriously, failing to keep a journal is widely considered the #1 reason new traders fail. And we're not just talking about jotting down some numbers here. A professional tracks everything. Yes, they log entry and exit points, but they're also writing down the specific reasons for taking the trade, how they felt emotionally during it, and exactly what mistakes they made. Reviewing this stuff constantly is like holding up a mirror. It helps you spot your own behavioral patterns so you can actually improve your decision-making over time. At the end of the day, the fundamental difference between making it and losing it all comes down to your end goal. The amateur is running a sprint. They're desperately chasing that one big, massive, exciting win so they can brag about it. But the professional, they're running a marathon. Their goal is honestly kind of boring. It's just producing consistent, steady results, month after month after month. The person earning small, steady profits for years is always going to mathematically and psychologically crush the amateur who's taking wild risks for huge gains. Which brings us to a final thought I want to leave you with today. The biggest secret about trading? There really is no secret. There's no magic indicator that's going to save you. Success just comes from discipline, patience, and a willingness to keep learning. So before you click that mouse and place your next trade, ask yourself this: are you going to spend all your time trying to master the market, or are you going to put in the hard work to master yourself? Thanks so much for joining me on this explainer today. Remember to keep those losses small and keep learning.